Okay, so now if you're in a portfolio of companies as a venture capital firm or a private equity firm, it's quite likely that you'll have the very familiar bell-shaped curve distribution. Will all companies be alphas, betas, or charlies? Probably not. There's going to be some percentage that need work down here, the deltas, the echoes, and the foxtrots. Most will be okay, and a few will be excellent at the ABCs. Now, if you're lucky, you're all on this side. But if you end up with some over here, then you've got to move them back over to here. And guess what that takes? It takes work, cash, skill sets, and people. It also needs a process. How do you decide? What is the performance scale? How do you hold up the balance and decide whether you're an alpha company or a delta company? This is an important process that all venture capital firms and entrepreneurial firms have to think about. How do they decide? Do they invest in a delta company, or do they cut it off? Do they starve it of capital because they haven't delivered on their milestones? Does it have high potential, and can it get back to a Charlie company, or is it condemned to be a foxtrot? And how do you do that? Do you do an internal choice? Do you do an assessment, or do you let the market speak? Well, in the end, the market will speak. If you try to take the company to market, the market will speak and tell you what the company is worth. But how about if you need to inject capital at some point along the way? And so there's choices to make, there's formulas to think about, and